You know, consumer prices have showed signs of easing with lower gasoline prices, which is great. The CPI released in July was encouraging, with the declining energy and gas prices offsetting rising food and shelter costs. We saw interest rates go down. They've come back up a little bit, but if you show that CPI slide, Michael, this is kind of what we're looking at. U.S. inflation eases in July. So this is good news. We're still about 8.5%. The three-year average is just below 5%. We have a little ways to go, but I think the Feds are doing the right thing. Although rates continue to fluctuate, recent data suggests that the housing market is stabilizing as it transitions from the surge of activity during the pandemic to a more balanced market. Declines in purchase demand continue to diminish while supplies remain fairly tight. Let's look at the slides. We have some great data. It seems like sellers are becoming more hesitant about listing their homes. This is the active inventory and projected inventory through the end of the year for the nation. During the last 4 weeks, we saw the number of new listings fell 12% nationwide year over year. Despite the drop of new listings coming on the market, the overall housing supply rose 4% during the same time 4 weeks ago. We can attribute the decline in the new listings to sellers becoming aware of a diminishing housing demand and not wanting to test the market. Also, most homeowners are locked into these great interest rates, and it's hard for them to move. So if we look at the next slide, this is demand, and demand it's jumped back up a little bit. We're seeing a little bit more activity. I think this August month, once it goes by, we're going to see kind of a spike in the fall. It seems like a lot of people are on vacation. And then, of course, seasonally, we're going to taper off in November and December. And the next slide is the Southern California expected market time year over year. And we're hovering right around 75 days on market, and it's been that way. It's coming down a little bit, and it will remain that way through the end of the year. The next slide is the percentage of properties. I like this slide. It's the percentage of properties with the recent price reduction, and this is a real indication on what prices are going to do moving forward. Nationwide, we're averaging 38.4% of all homes that sell experience a price reduction first. In a normal balanced market, we typically see 30% of homes experience a price reduction before they sell. This is far greater now than some of our hottest local markets. Check out these numbers. This is crazy. Boise, Idaho, price reductions are up to 60% of all active inventory. Phoenix, we've seen 58% of price reductions. Austin, Utah, Florida, and Denver are all seeing 50% or more of their current stock has had a price cut from the original list price. Prices in these metro cities are all investor-heavy markets, and the investors have pulled back much more than the owner-occupied markets of Southern California that we have here. These also are heavy favorite destinations for the California. Once they were selling their homes, they were going into those markets. We're not seeing that migration as much now. I'm not trying to scare you, but rather educate you. Work hard on prospecting and use this information to set realistic expectations with sellers on pricing and what is happening with the market. Professional agents can always get the job done in any market.